Hi, welcome. This is this Something More with Something More, our little web extra for you. And what I was thinking we would talk about, some of the things we didn't get to. We had a fun show with having Representative Dan Winslow on the show at the second hour. Our first hour didn't go quite as planned, but if you didn't catch that, you can always check it out on our website or the podcast on iTunes. In any case, we didn't get to talk about some of the economic things and market things that I wanted to at least touch on. And one of the big events that caught my eye this week on Friday was gold dropping by about 5%, not quite 5%. And a lot of the precious metals had similar challenges. So what we saw was, I was looking at the ETFs for this, IAU and GLD and some of these others, when it comes to precious metal, gold specifically, ETF. Now, what we saw is gold had a pretty big drop, kind of out of the blue. And what was interesting, it had been, in terms of the GLD, I think that's the most commonly used gold ETF proxy, we had seen gold kind of hovering around the 150 range or better. It seemed like it had kept support until Friday, when it violated that support, and where it was really looked like 148 was a support level, and it's kind of found some support. I don't know if it's 144, 143, somewhere around there, and that is maybe a point where hopefully it'll keep that support. But if it doesn't, it does seem likely that maybe down as far as 130 would be where it would find its next support level. So what does that mean for you? It means maybe you want to think about, do you want to have a stop order in if you still have GLD? Maybe if you're thinking you'd like to have more of a presence in gold or precious metal because you're feeling more defensive, you might look to that as an entry point somewhere either in that 143 range, or maybe if it goes down to the 130, you might look to that as an opportunity to get in. And there's more than one way you could do that. Obviously one possibility would be just to have a limit order where you say, if it gets to this price, I'll buy it. Another possibility had a client we were talking about was using a put, selling a put as a way to get in at around the 130 price point. So if you did that, sold a put based on what I was looking at yesterday, you might be able to get an income from that to sit on the cash, and if the GLD gets put to you at 130, you'd end up having to buy it at that point. And ultimately, by the way, GLD has both regular options and mini options, so you could potentially do this with less money, and might be an appealing way to get in. So what happens is, if it doesn't get that, you're getting some interest while you're waiting for the price to get hit, maybe to get the position put to you. Annually, if you were to do it what you could make this month, you'd make probably about 4% in annual terms. The reality is you're making only 1/12 of that at a time, and whether those price numbers will change over time as the position moves in its price, that'll be affected. But just a thought as one way you might try to consider whether or not you want to get into gold. If you do, maybe the use of a put would be a way to do that, or simply a limit order. In any case, something to watch. If you have a position, you want to be really questioning at what point do you want to trim that position. People have a lot of gains in gold because it's gone so well for such a long time. You do want to think about at what point do you lock in some of those gains, or do you just hold it forever? The worry you have is if you hold it forever and it declines, and maybe you keep it too long and you may give up some of the gains you've made. I think it's likely, though, because we've had such a long run in the stock market, it wouldn't be surprising to see stocks start to have some pressure at some point. Right now, there's no indications that that's the case, but it just seems likely at some point we're going to see a little bit of an interest in people cashing in some of their gains if there's any bit of nervousness in the market. And what happened this week may cause some maybe see more of this that could cause some of those kind of concerns. And if that happens, gold could be a benefactor, possibly. TIPS that have been hit hard of lately, TIP as an ETF that is one of the many investments that invest in TIPS. I think a mutual fund example might be something like PIMCO's Real Return Fund, but there's many good ones out there. Vanguard has one as well. In any case, check it out. One of the ones you might consider is these kinds of investments that have inflation-protected securities. They would also probably be a benefactor if we see fear in the market, and they've had a bump down and seem like they're finding some support where they are. So why would we see the market go down? It seems like it keeps going up, and maybe it will. There's no reason to say that it definitely has to end. We are running into a seasonal consideration, the seasonally strong time of November to April through April tends to historically be when we see the best returns from markets. That old expression, sell in May and go away. So you could have that as part of the cycle of things. But that's probably not the driver, but you could see people kind of jumping onto that kind of thought process. Similarly, we had some news report this week where we saw consumer spending is really flattened, and consumers are not spending the way they used to, whether that is PCs or whether that's spending money at Walmart or wherever it might be. We're seeing that the consumer has kind of clammed up a little bit with their wallet, and that may be partly because of sequester, or the fiscal cliff, the increase in their tax, payroll tax, things like that. But whatever the reason, that could work its way into some economic data, and it wouldn't be surprising to me at all to see that happen and for us to see some setback. Now, does that mean you should do anything? For most investors, probably not. That means if you're putting money into your 401k, keep buying. It's a good time to keep investing as markets go down. Gives you an opportunity to get in cheaper. For maybe some of those retired investors or more cautious investors, or people who've seen a lot of run-up who want to maybe secure some of those gains, maybe it's a good time to be trimming some of those positions, rebalancing your portfolio, or looking at the idea of at what point are you going to consider having some stop orders, or just at what point do you think about pulling a little bit of your gains out of the mix and secure them and have a plan. That's really the bottom line. It's a good time to be thinking about, maybe not even acting on yet, but developing a plan as to how far do you let things run when they've grown, and would you be better to be thinking about the possibility of starting to think about that exit strategy on things that have done well. Okay, so that's kind of my little web extra for you. I wanted to touch on gold and some of these earnings, or rather economic data. And I think that I want to also remind you about our upcoming retirement readiness seminar. I've talked about it on the show, but if you didn't catch that, hope you'll check it out. We're going to have a seminar on April 23rd at 6:30 p.m. at the DoubleTree Hilton in Hyannis, right by the airport. So I think we'll have a good crowd for this, so I hope you can register early. To do that, check it out on the website. We have a place right on the top of the website where you can, early on the website, you can click right through, learn more about what we'll be talking about, and you can register right through the website or send us an email at info@amrfinancial.com, or you can call us at 508-771-8900. Happy to have you just register by giving us a call. We'll talk about some of the things to think about as you're maybe getting ready for retirement, some of the things you need to be thinking about as it relates to your spending, how much you can withdraw from your investments. We've talked already a little bit about Social Security, estate planning, and mortgage issues. We'll probably touch on them briefly, but we'll go on to probably a lot of other things, including long-term care considerations. How do you plan for that? What are some of the ways people do that? Some tax considerations, and I'll spend a fair amount of time on portfolio thinking, not the least of which will be how can you invest in stocks in a way to try to develop income and manage risk, as well as on the bond side or the fixed income side. One of the things I think we're going to have to really be thinking about, and you're going to hear more about over the many years to come, as it's not today's problem, but it will eventually be, that interest rates will start to be a concern. And how are we going to plan for that in your portfolio? Because rising interest rates tend to detrimentally affect existing bonds. And so we have to have a plan of action for how you're going to structure your portfolio when you get close to that time coming. So we'll talk a little bit about that, give you some ideas for you to think about, and hopefully you'll decide you think it's a great idea to come and see me and see if we can be of help to you. But if not, it's a complimentary seminar. Hopefully you get some great information, and maybe over time you decide to come and see us. In any case, low-key and hopefully great information. I'm going to give you a whole bunch of materials for you to take home. Thanks for joining me. Until next time, keep striving for something more.